Well, welcome everyone to the 2021 State of Sustainable Fleet launch event. We are thrilled to have you here today. We have an excellent panel that we are going to have a discussion with after the opening discussion that we're going to have with John Morris, the Executive Vice President and CEO from Waste Management. So we are thrilled to have you here with us today. Couple of housekeeping items as we get started. We will have a Q&A session at the end of the event, so please take the opportunity to submit your questions in the box at the lower right-hand corner of the screen. You can direct your questions to the organizer, and we will see them, and then we'll ask those of the panelists. There will be a recording of the webinar, and we'll send that out at the end of this week by email to the email that you used to register for the event, and you'll be able to share that with whoever may be interested. We do ask that at the end of the webinar, if you wouldn't mind doing our quick 30-second survey. It really is helpful for us to always improve how we're delivering this sort of information in the future. And lastly, if there's any technical issues that you have, please contact Ben at GNA using the email address that you see here on the screen. So let's dive in. Again, thanks for joining us. This is the second year of the State of Sustainable Fleets. For those that may not be familiar with the State of Sustainable Fleets report, this is really the only comprehensive and technology neutral assessment that is provided for the medium and heavy duty sector. And the report covers multiple fuels and technologies, including natural gas, propane, battery electric, and hydrogen fuel cell electric. And we look at this across 9 different types of applications, and really compare that to the baseline of diesel and gasoline, obviously the dominant players in the market. Today we've released the 2021 Market and Trends Brief, which really highlights the big developments in the market in the last year, which is, of course, as we all know, a very interesting year, but one that saw really incredible growth in the industry. It was interesting to dig through the data and see the trends in spite of the challenges of 2020. So that's all in this Market Trends and Brief report. It's an update to the 2020 really foundation report that we released last year. Very, very comprehensive overview of all these fuels, all these technologies, and so this really provides that quick snapshot update on the different segments. One of the things we also did this year is we released the mini guide, which is a really concise 5-page document. It's intended for fleets to just get that quick snapshot on the state of each fuel and each technology. We try to break it down into the certain duty cycles and fleet sectors and provide some ideas on how a fleet can get started. So all of this material is available as of this morning on the website, stateofsustainablefleets.com. So encourage you to go check that out, download it, distribute it, etc. Of course, this work really would not be possible without the tremendous support that we've been able to receive from our 3 title sponsors, Daimler Trucks North America, Shell, and Penske Transportation Solutions, as well as our supporting sponsors, Cummins, Geotab, and DTE Energy. So we really thank all of those leading companies for their support and allowing for this sort of work to happen and to be pushed out into the market to help accelerate the investment by fleets. That is ultimately the goal here. Okay, so what are you going to see when you visit the website, download the reports? As I mentioned, despite a crazy year, a global health pandemic, a resulting economic crisis, the level of investment that we've seen both on the supplier side and the end user side has continued to grow, and grows really significantly. We saw that deliveries for natural gas were continued to be very strong. There were still very strong orders, and there's great momentum there. Obviously, we all see in the headlines the investment and growth in the battery electric vehicle sector has continued to swell, but we also saw the growth in renewable fuels in the last year too. So really good to see in spite of the challenges that were presented in 2020. One of the things that we do for the annual State of Sustainable Fleets report is we try to survey the market. We survey hundreds of fleets and ask them, what's their perspective? What are they seeing? What are they doing? What are their questions? What are their hesitations? What gets them excited, and what are they investing in? And one of the things that was really stood out for us is that 83% of the fleets that responded to the survey confirmed that they plan to increase their use of cleaner fuels and cleaner technologies in the next 5 years. So that was good to see. Lots of interest from that end user market, which is of course so important to make all of this work. As we kind of dig into some of the details, we saw that CNG continued to demonstrate a very positive total cost of ownership, really led by fuel cost savings. The refuse, the transit, and the heavy-duty truck sectors were the areas where we saw continued strength and growth in those markets due to that very, very positive total cost of ownership. We also saw a major trend in acceleration of ultra-low carbon and in many cases carbon negative renewable natural gas to complement the truck investment. And so we're seeing total cost of ownership and total environmental profile significantly improved, and that we think is really important, right? Because sustainability is, of course, about economic sustainability as well as environmental. Propane, as we dug into that segment, we saw this very similar benefits to what were being reported with natural gas is great fuel cost savings, great total cost of ownership. We saw the beginnings of a renewable propane market, so excited to see where that leads in the future. The segments where we saw real strength for propane was the school bus, paratransit, and some of those sort of medium heavy-duty urban delivery sectors. Battery electric vehicles, frankly, it's a little hard to wrap our arms around it. There's just so much going on, and I think the conclusion that we took from this year's study and report was that obviously, battery electric vehicles are really poised to become a leading fleet technology here in the very near term. It's hard to put an exact year on that, but just looking at the research and the data, it looks like the next 3 to 5 years are going to be a real critical ramp period for battery electric commercial vehicles. Given the fleet commitments that we've seen, some of the early purchasing and orders that are being placed and then therefore delivered, the OEM commitments to continue to develop and release commercial product, a lot of which will start to come online and be delivered here in the next 12, 24, 36 months. And then in that 36 to 60 month time period is when we really start to see that commercial production and ramp and vehicle availability increase. So very exciting to see all that. Really, and one of the things that came through is, there was a lot of feedback about the costs, right? Battery electric vehicles are still fairly expensive, but there still is a lot of interest and anticipation of the cost savings, much like we see in CNG, being able to justify the higher capital investment required upfront will be offset by the lower operating capital requirements over the long term. So lots of things happening in that market. And then, last but certainly not least, the hydrogen fuel cell market, another, standout for 2020, just a lot of news, a lot of announcements, particularly by the OEMs and the infrastructure providers who are committing and investing, right? We see hundreds of millions of dollars being invested in this market to build a hydrogen future. We saw a doubling of the number of hydrogen fuel cell models coming to the market in 2020. A lot of that focus was in transit and in the heavy-duty Class 7 and 8 truck market. So lots under development there. A couple of the other takeaways that we saw is sustainability and the commitment on low and no carbon is really going to be a powerful driver. And there's a couple of aspects to that. One is just the sort of backdrop of regulatory and policy. We see a lot of things happening at the state and international level that are just going to mandate lower carbon, more sustainable transportation. So that is already driving the market, driving investment by OEMs, driving interest and exploration by the fleets and commitments as well. The other piece is, in addition to the regulatory, is the sustainability commitments being made by the corporate world to achieve net zero emissions by 2030, 2040, 2050, whatever the time frame is. So that is really, we think, going to accelerate the market moving forward. And thankfully, the report showed that the benefits that we're seeing in these clean fuels and technologies, the sustainability benefits, are improving, in addition to, of course, as I mentioned, the economic. And so as we see the increased benefits, that really helps to accelerate and motivate the fleets to continue down their path in this journey, to make these investments in more efficient, cleaner, renewable fuels and technologies. So there's a lot going on in the market. We try to summarize that as best we can in these snapshots and mini guides and trends report in this year's 2021 State of Sustainable Fleets report. So that's a very quick snapshot of this year's initiative. Again, please visit the website, download the reports, and I think you'll find it very informative. So with that, we're going to begin with a fireside chat, as they call it. We're really thrilled to have John Morris with us. He is the Chief Operating Officer and Executive Vice President at Waste Management, who is clearly a real leader in the advanced technology, clean fuel space. They have been so for many years and continue to move forward aggressively. So John, great to have you. Thanks for being with us here this morning. It's a real pleasure and an honor to have you. Waste Management has been, as I mentioned, a real champion in the industry, one of the absolute top leaders in making investments in clean fuels and technologies. And so, just as we get started, I kind of ask you to maybe provide a little more introduction on yourself and really the Waste Management story and what you guys have been up to for the last decade or so.
Thanks, Eric. Well, I've worked for the company since about 2 years out of college. I don't want to date myself, but it's been a few years. And obviously have the good fortune and benefit and privilege to hold the position I do now. I think the story on what we've done with natural gas and CNG is pretty interesting. I did some digging just in advance of this. I mean, to date, we've probably spent over $2.5 billion on our CNG fleet, not including the pilots. Eric, you and I were chatting about that we started way back in El Cajon outside of San Diego some years ago, actually LNG trucks. We've also spent probably $300+ million on infrastructure, putting in those CNG stations, both private and public, around the country. And I think we have about 50 public facilities out there as we speak. Today, even prior to our acquisition of Advanced Disposal, we were closing in on 75% of our kind of routed vehicles on the street every day running on CNG, the collection of heavy duty cycle trucks. That number dipped a little bit down, obviously, with the acquisition of Advanced. They were on a similar path, just a little bit further behind us. So we're probably hovering at about 70%. But I would tell you that our strategy with and since the acquisition of Advanced is not changing around CNG. We're going to continue to drive that number up, and we think probably mid 80s is doable right now. And as you know better than anybody, the infrastructure piece can be a challenge in some locales, right? But from a capital and cost standpoint, and frankly availability. But right now we're very pleased with where we're at. We're going to continue to buy predominantly CNG where the opportunity exists.
So those are impressive numbers, almost, rounded off to about $3 billion of investment in this pathway over the last probably 2 decades, right? That El Cajon project that we mentioned is the big initial foray for Waste Management was circa 2002-ish, something like that.
Yeah, close.
But obviously you're not going to spend $3 billion unless there's a positive economic impact on the company. And we saw that in the data and the surveys that we do see time and time again. CNG and propane is providing that total cost of ownership benefit. One of the things that I've been sort of confounded by is obviously you guys have had a great experience. You've got it dialed in, you've got it figured out. What's been the magic? Like, why haven't others gone as aggressively as you have down this path with natural gas when clearly there's great benefit there? What are we missing?
I'd like to say, we have it more dialed in now. I don't know if we're totally there. We're learning lessons all the time, and the technology is improving, right? And so all the processes around how we operate and maintain a CNG fleet are going to continue to evolve. But you're right, we learned a lot of lessons early on, and I think for a big fleet like ours, the largest heavy-duty fleet in the U.S., we had the capability to take some risks and take some chances in terms of how we entered into kind of CNG fray, if you will. For somebody who runs a smaller fleet, it's a little bit riskier, right? You're talking earlier with the panel about, somebody referenced, somebody owns a landscape company, has a fleet of vehicles. Well, pivoting, if you've got a fleet of 10 trucks and you're thinking about going to CNG or propane, it's a little bit different risk profile, right? So I think part of the reason was maybe some apprehension is if you were not a big fleet and didn't have the capabilities that a big fleet brings you, you could stub your toe, so to speak, and not really damage the business. I think we learned a lot of lessons through that and afforded us, anyway, the ability to go out and take some of those chances. And I will tell you, early on, when you put a CNG engine in front of a technician, there was some apprehension, like, I know how to fix a diesel motor, but I'm not really sure how to fix this CNG thing you just slid under me, and the fuel system that comes along with that versus a conventional diesel truck, et cetera. But I do think, I think some of the apprehension was that some of it was around cost. We've talked about that. There is a premium to converting to that kind of fleet. I do think, Eric, and I've heard you say reference this a few times, it's this total cost of ownership model. And obviously, the smaller the fleet, the infrastructure challenges are a little bit greater, if you will. But as you start to scale up, when you look at a total cost of ownership, especially with kind of the per gallon equivalent of what it costs to put CNG into a vehicle versus diesel, I think you're seeing more and more folks kind of move from traditional gas or diesel engines into CNG. I think part of it too is around the lessons learned, right? We've all learned a lot of lessons about how to develop the infrastructure, manage the fleet. And I think part of it is what I guess the punchline is, you can't disrupt your business while you're doing it, right? In our case, we still have to service all of our 25 million customers. If you're the landscape contractor, you've got to make sure you get to all your customers, and making that conversion can be a little bit scary on that front.
Yeah, absolutely. And I appreciate you, sort of calling out the small fleet versus the large fleet that has the capital capabilities to take some risk and take some chances. And you guys have done that. And hopefully, I know we work with your team every day, and I know that they're always very, very willing to try to share and provide those lessons learned for the market to take advantage of and help accelerate their path. But as you think about the history and the lessons learned, and thinking about the clean fuel market, and not just specifically CNG, because all of the fuels and technologies face this same conundrum, right? As you've got the sticker shock, you've got these huge capital costs for vehicles, you've got infrastructure that has to be built, you've got maintenance shops and massive amounts of training for techs to be able to work and keep the vehicles running, right? You guys have figured it out. What comes to mind as far as, like, what's been the secret sauce for you guys? How have you really continued to maintain that focus and dedication to get it to where it's like, okay, we're comfortable and we're really going to continue to invest at a high rate?
I think first, Eric, having the conviction to follow the technology early on, which, that can be risky. We were joking about the LNG trucks in El Cajon. I mean, they were not ideal when we started, but we understood at that point that there was a path forward to alternative fueled vehicles. And we had, again, the luxury of being a big company. One of them is to be able to do a little bit of kind of the incubator test right on the fleet and be able to know that you're not going to disrupt your business. I jokingly said the fear of the unknown, but when you talk to the operators, the folks in our fleet operations, there is a little bit of that about, how do I do this, right? And I think what we've done is taken it, from a cost standpoint. Yes, you have to spend some capital. Yes, you have to retrofit shops to be able to accommodate a CNG fleet. You have to train your folks. You have to do all that, right? And that does come with some costs. But if you can kind of look past that over the long term, we were very confident, and obviously, as evidenced by where our capital spending trajectory is and has been on CNG, we feel very confident in the kind of total cost of ownership model with these trucks. And I would tell you, what we've learned is, if you go out and talk to our technicians now, and you pull the CNG, especially if you take a site where we have 100% CNG, which is a lot of them, and so we're going to go back to diesel, I think we'd hear from our technicians is, no, I prefer working on a CNG truck. The fear of the unknown is not there. I think from a reliability standpoint, we've become a lot more comfortable with the reliability again, as evidenced by our purchasing trends on the reliability of those vehicles. And I think that's important too, because when you think about environmental impact, right, whether zero emission fuels or this bridge that we're on now with the fuel system we're talking about here with CNG, reliability is really important, not just from disrupting your business, servicing your customers, but from an environmental perspective. If you don't have reliability in your fleet, there's inefficiency. When there's inefficiency, there's going to be more of an environmental footprint. And that's one of the things we learned along the way, aside from just the cost of the fuel, the capital considerations, training, et cetera, the reliability of that fleet and the uptime of that fleet has been steadily improving. Part of that's because of the technology, part of it's because of our processes. And when you wrap that all together from a total cost standpoint, again, that's why we continue to be very aggressive in our purchasing strategy for heavy duty vehicles that are CNG.
Great, great. So one of the key elements I know for you guys has been the investment in renewable natural gas. And as I mentioned, in this year's State of Sustainable Fleet report, we saw a massive scaling of renewable natural gas. And at the end of 2020, just about 100% of the natural gas being used in California as a vehicle fuel is certified by CARB as renewable. California is the largest market for natural gas, although there's a lot happening in the rest of the United States. But even in the rest of the United States, about 50% of the fuel being used in transportation is renewable. And so question for you is, what made that work so well for you guys? What was the trick on renewable fuels and renewable natural gas in particular?
Well, we've got this large fleet of vehicles. We have a large fleet of landfills. Those landfills, the MSW landfills, produce some levels of gasoline, methane that we can convert. So first and foremost, I think we have an obligation from an environmental perspective, regulatory perspective, to manage that gas, regardless of how it gets processed. The technology's been such that where we had a lot of landfill gas to electric facilities that still are out there, we're now taking a look at converting that landfill gas, cleaning it up and turning it into transportation fuel. To your point about California, if you look at it, I said about 75% of our fleet prior to the ADS acquisition was running on CNG. And I would tell you over half of that fleet is being fueled today by RNG. And if you were to take it and look at our fleet on the West Coast, the entire fleet in California, Oregon, and Washington are all being run on RNG. And the fuel's fungible about where it's produced and where it goes in the pipeline. But so we've progressed on that front as well. We have more than half our fleet running on RNG. But to your original question, we have this obligation to manage this gas from an environmental perspective. Technology advanced enough that we were able to make some investments in these facilities. We've got 4 done, and we're building our 5th one, where we can obviously convert it and turn this into transportation fuel. And when you think about it from an environmental impact standpoint, while traditional regular compressed natural gas has environmental benefits, the fact that we're taking methane that would otherwise be theoretically flared or converted to electric and putting that back in, it's the ideal way for us to really close the loop with what we're doing on our fleet. I would tell you there's been, and folks in this business, this for sure, the volatility has been really on things around RINs and LCFS credits and the movement in that. And when you think about investment decisions, RINs are, last time I looked, D3 RINs are probably $3 and change, $3.20. There was a point where they went from 2 and change all the way down to south of $1, and now they're back up. I think one of the things we're watching is obviously with this administration, we think there's going to be more support for that. We've been watching obviously what's going on with the RVO, the small refiners exemptions. And the only reason I bring that up, Eric, is because on the RNG side, a lot of that right now is driven by the subsidies around RINs, and depending on the state you're in, LCFS credits. Having some visibility, some clarity, and some stability in that market makes the decisions to build these RNG plants a little, obviously puts us on stronger footing to be able to do that. But back to answer the question, we've got an obligation to destroy and manage that gas coming out of these landfills. We've got it going into electricity in a lot of places, but obviously the economics of RNG have obviously changed, and that's why you see starting to migrate towards RNG investments.
So I'd be remiss if I didn't ask you about zero emission vehicles, right? That is the fuel du jour these days. Just tons of interest and excitement and investment. I know it's not something that's ready for you guys at prime time yet, but I know you're looking at it and testing and thinking about what that future might look like. And so as you think about the journey you've been through with CNG primarily, now RNG in the last 20-ish years, what are some of those metrics that you're going to have to apply to zero emission technology to prove to yourself this can work in the routes, in the applications, that reliability factor? And, are there locations or duty cycles, or, what's your thoughts on where we go with zero emission in the refuse sector?
Well, I think, Eric, it's going to start with the lighter duty part of our fleet, and we've got a considerable fleet that are service vehicles, supervisory vehicles, those things that aren't the heavy duty cycle. And I see it migrating there first. In fact, we've got a few pilots up in, I think, Pacific Northwest is one of them, where we're running some light duty vehicles that are zero emission technology. And I think in a lot of ways, we're going to follow the same path as watching the technology advance. I mean, listen, we've looked at Volvo Mack has got a battery electric vehicle for the refuse industry. We've looked at it. We've gone up to visit them, and the technology is impressive. But I think it's got to go back to those things you and I are talking about. Is first and foremost, disrupting the business is not an option. So we have to make sure that the technology is advanced enough. I think for BEVs, I think infrastructure is an interesting question that's got to be asked and answered, right? CNG is not available everywhere, but it is pretty prevalent. And believe me, I am not the expert on BEV infrastructure, but there is a different infrastructure question that's got to be asked and answered. And where is it going to be available? What's the cost for that? And then I think the last piece, when I talk about tech advancement for the heavy duty part of our fleet, which is a big chunk of it, call it 15,500 vehicles a day. When you think about, can you propel the vehicle? Yeah, you can certainly do that. What's the parasitic load of the batteries versus what we're doing today? The other interesting piece of it is moving the chassis. And for those in the transportation business, and we had our friends on from Penske earlier, moving the chassis is one thing, but if you look at the refuse industry, the chassis is only a piece of the formula. It's what's behind the chassis, right, or in front or on top of the chassis that has to also be able to operate. So when I think about BEVs as an example of zero emission, that part of the equation has to be asked and answered, in that we can make sure that our vehicles, which are heavy duty vehicles, including all the parasitic load that comes from operating the actual vehicle, can be handled accordingly. Does that answer your question?
Yeah, well, look, we all know the zero emission heavy duty market is one that is super interesting and fascinating, and one that everyone wants to get to as soon as possible. But there's still a lot of pilots and demos, and that proof, that reliability that we need to get through to be able to really scale. So I know you guys are working on it aggressively, and a number of other folks are as well. And so we'll check back this time next year and see what progress we've made.
So let me pose one to you, Eric. This is a good segue. You've been doing this a long time, long as anybody, and you've watched how we're talking a lot about CNG here, but you've watched the progression, kind of the bumps and the dips, if you will, of how it got us to here. When you look out at zero emission or BEVs, what similarities do you see in that path? If you compare that to CNG or 10 or 15 or 20 years ago.
To me, there's a couple of things that come to mind, right? One, it has to be economically sustainable before it's environmentally sustainable. The environmental benefits that we're seeing with zero emission vehicles and then the ultra low NOx engine technologies, whether that's natural gas or propane mixed with a renewable fuel that can be carbon negative in many cases, is unbelievable, right? And so that's great to see. But ultimately, the simple answer is TCO, right? It is the total cost of ownership. I'm going to do all these things. I'm going to buy these vehicles. They generally have a higher capital cost. There's a lot of operating cost advantages, particularly with fuel costs, if you get it figured out right. And there certainly is the potential to do that with zero emission. And we're doing a lot of work in that segment and capturing the LCFS and RIN credit, like you see in RNG. You can do a lot of that, if not, even better in the electric space. And so that provides a tremendous amount of benefit, right? So you have to have the total cost of ownership proof to be able to really scale. And infrastructure, right? You mentioned infrastructure a couple of times. That is going to be really critical. But that's part of the TCO, right? And so, everything sort of just, in my opinion, rolls up to TCO, right? Because that captures everything. It captures the maintenance, the tax, the capital, the operating, the fuel, the infrastructure. It all has to work. So, and the reliability and range issues and being able to complete a day's route for you guys, et cetera, right? You can't buy 2 trucks for every one to do the same job, right? It doesn't work. And the interesting thing, I think, for you guys in particular is you have really mastered the CNG so well, and your economics are now superior than to diesel, right? And so the bar for zero emission is now to get below CNG, right? And I'm sure if you guys can do that, you're all in. So as I said, we'll check back next year.
Good.
So John, really, again, appreciate you being here and having this little chat to get things started. You guys have been tremendous leaders in the space, and I could ask questions for, frankly, the next 24 hours to get into it all. But we do have limited time. I want to ask our representatives of the State of Sustainable Fleet title sponsors to please join us here on our virtual stage. So while they're getting their camera fired up, I'll do a quick introduction. We have with us Drew Cullen. Drew is the Senior Vice President, Fuels and Facility Services for Penske Transportation Solutions. Drew, how are you?
Great, glad to be here.
We have Rakesh Anija, the Head of E-Mobility for Daimler Trucks North America. Rakesh, great to have you.
Good morning, everyone. Good to be here.
Calling in from across the way, we have Patrick Correa, the Vice President for Commercial Road Transport Sector and Decarbonization for Royal Dutch Shell. So Patrick, nice to have you.
Hey, it's afternoon over here, but good morning to you.
Good afternoon. Great to have all of you. Thanks again for the support of this year's State of Sustainable Fleet. We couldn't do it without that. I want to jump right in here. We've got a lot of questions, a lot of good discussion to have. And I was listening to CNBC this morning, and they're talking about this really revolution that's taking place in the capital markets, whether that's the investment community or internally or driven by policy and regulatory, but this push to a more carbon constrained world, right? Trying to get to zero carbon. And so, the first question really is, what does this fundamentally mean for you guys and your companies and the investments that you're making? And Drew, maybe I'll start with you. Where does sustainability fit into the priorities in a large organization like Penske?
Well, thanks, Eric. Really appreciate the opportunity to be here. And John, that was a great discussion you and Eric had. Thank you very much for that. And Patrick and Rakesh, really great to have you guys as part of this as well. So I'd probably say that sustainability is, it's kind of part of our DNA, right? And John, you talked about this before with, when our customers really turn to us, right, to get them a vehicle, build them a vehicle, provide them a vehicle, maintain that vehicle that will do the work that they need it to do in the most efficient manner, right? Our logistics group, right? I mean, they are constantly optimizing customers, supply chains, right? Our maintenance team, right? They exist to ensure uptime for our customers' fleets. We have a connected fleet strategy that we provide customers with, all this information and data to be able to help them optimize their fleet operations. So, as John mentioned, all of those things, those efficiencies, those waste, removals, the processes, everything, all that sort of lends itself to, sustainability. So it is definitely integrated in with, what we sort of do every day. I think what's interesting is, like I said, our customers come to us for transportation solutions. And what we're seeing happening now is they're starting to ask us things about, hey, what are you doing with your buildings in terms of, energy efficiency? How do you handle your, waste streams? How do you look at your energy, right? What kind of organizations are you part of? How do you measure, right, all this stuff? And they're also telling us how they're doing it too. So there is definitely a sustainability and efficiency, those types of, it's definitely been raised a notch, right? Just in the past couple of years, since, probably the first, coincidentally, the first State of Sustainable Fleets report.
They're saying our timing was good.
Yeah.
Patrick, I'll turn to you. Shell has really invested heavily in lower carbon solutions. You guys are big in the renewable natural gas portfolio. You have Green Lots as a portfolio company in the EV space. You have Shell Hydrogen. I'm sure an array of renewable fuels and as a gasoline and diesel fuel substitute or blend stock. What's the Shell perspective on this sort of all of the above approach? Is that what you think is going to be required as a true really portfolio going forward?
Yeah, I think first of all, let me say I thought John's story was incredible, and I think showed a lot of things that are really sort of valuable to bear in mind also for this discussion. Because I think for me personally, one of the things that I learned from a story like John just shared and what Waste Management has done is that for specific use cases, like refuse, for instance, in today's world, the technology is already there. And if, like John and his team have done, if you put your mind to it, you can actually do it. It's already a reality. It works already today with existing technology, etc. Now, admittedly, that may not be the case for other use cases, right? If you have to drive steel across the Rockies, you need a different kind of infrastructure to make that happen. But it goes to show that, and you were drawing that out, Eric, I think very clearly as well, is that TCO per use case is absolutely critical. I say that because I am very reluctant, or we are very reluctant, to get drawn into a scenario that says the world is going to look like that, and we have the answers to all of that. I think that is a very, very dangerous thing to do. We have been, I think I could say that here, we and others have on the infrastructure side have been burned by, building infrastructure, white elephants that then, are just that infrastructure without really being used and leveraged. So it's critical that we do this together with our customers. We are very clear per the use cases, where the TCO is right and what infrastructure we need to provide. The TCO, of course, hangs or it depends on many factors, not least the regulator, taxes, etc., subsidies playing a big role into that. So that's also something to, of course, bear in mind, and that is subject to the political direction either way and can change over time. But it's clear to your question, Eric, that we as Shell will want to play on, as we called it earlier, the entire piano of technology options. It is clear that we will continue to invest in infrastructure, in, I would say, all of the credible technology options that we've discussed for medium to heavy duty road transport. It is clear that some of them are more available today and are more ready today than others, but we will not sort of rule out any of them, certainly not at this stage. But for the last thing I want to say, for the infrastructure, what's critical for the infrastructure project is that we don't get, as potentially it has been done in the past, let's say, we don't get just go out there and put steel into the ground. It is important we do it together with the OEMs, so Rakesh and Daimler and potentially others, to go into a partnership with customers and say, okay, we know there's demand, we know this use case can work, we know the TCO is right, and we invest in infrastructure, and then slowly build this up. I think this is the way it's going to go.
Yeah, Patrick, thanks. You're hitting on the economic sustainability, right? If you're going to make an investment, somebody needs to show up to fuel there so you can get your money back.
Exactly.
Otherwise, your shareholders don't tend to appreciate that equation.
Nope.
As does anybody, right? So Rakesh, I'm going to sort of transition to you guys. At Daimler have invested heavily in zero emissions, right? And have been one of the real leaders out in the heavy duty battery electric truck. You guys now are moving into the hydrogen fuel cell space, which I'm sure is going to require a few more dollars of investment as well. I know Daimler as a company has been very public about saying, we believe the future is electric. So, talk to us about the investments that you all are making and what you then see for that return on investment and customer adoption and uptake, and how then does also this portfolio approach impact those investment decisions that you're making?
Yeah, thanks for the question, Eric. Good morning, everyone, again. So yeah, I would say I'll go back to maybe one of your initial questions to Drew on the sustainability side to sort of weave this together, but it really starts with purpose. And on the trucking side within our organization, we are driven by the purpose of for all who keep the world moving. And you know, trucks are the backbone of any country's economy, certainly our country's economy as well. And with that now, looking at the needs of our planet over the next couple of decades, it's hard to sort of do that in a non-sustainable manner. So automatically the sustainability element becomes a foundational pillar to our purpose statement. And that's where the core conviction lies of, you know, fully committing to a world of carbon neutrality from a transportation perspective, at least, and our commitment that by 2039, as we were discussing earlier, we want to offer carbon neutral tank to wheel vehicles, at least starting with the triad markets. So with that sort of a core conviction and this long-term vision is the statement and the activities today of what we are doing from a battery electric vehicle perspective, as well as the fuel cell electric vehicle perspective. So those are the core two technologies we are focusing on heavily. And I am also a believer of you know, believing in all technologies essentially. So it's not necessarily to, you know, exclude one out or the other, but it comes down to a timescale question. It comes down to the use case question that Patrick was mentioning earlier, and also the limited investment, right? As an industry or as one organization, how many technologies can we commit to or invest to over what period of time? So I would say those are the dimensional elements we look at, but from a long-term perspective, fuel cell and battery electric, those are our sort of core two carbon neutral technologies that we are heavily investing in and looking at today. And yes, for the near term, you know, again, coming back to the time scale, the current technologies, diesel engines are going to play a significant role over the next few years for sure. So efficient engines, low emission engines, as well as renewable fuels, they all play a part, at least for the near term, as we look to transition to a long-term solution.
Rakesh, I'll follow up. You know, you mentioned time, right? And with a panel like this, I'd be remiss if I didn't dig a little bit on the time scale. Everyone wants to know, because you guys all have the secret crystal balls, right? What is the time scale? And I'll sort of focus a little bit more on the, you know, battery electric, hydrogen fuel cell, that zero emission future, right? That everyone's trying to get to as quickly as possible. But as John and I talked about, and a few of you have mentioned, right, that you have to have that cost parity. It has to compete economically in the business, as well as all the other operational needs that the vehicle has to meet. So what's the group's thoughts here on sort of general, I won't pin you down to a month and a year, but general timelines on when we're going to start to see that? And are there specific applications where we think we'll see that first? And I'll, you know, maybe help a little bit just by drawing upon the data from this year's report, where we saw really significant investment starting to happen in the medium duty delivery van space, right? We see customers starting to order that by the hundreds, if not thousands here in the near term. So I'll maybe start with that, but would love, you know, your all's thoughts on where else do we see battery electric really competing economically to be able to then deliver for the business and the environment?
Yeah, so maybe I can get started, and I'll offer you a precise month and year to answer that question, Eric, with a guarantee that that prediction is going to be wrong, right? It's a crystal ball, as you noted. But
This
yeah, I would say, sorry?
This is being recorded.
So yeah, I would say initial applications, as you noted, are there already. We are starting with those with customer test activities. And initial cost of the vehicle, that's one of the key metrics, right? In the initial price or acquisition price. And in general, that's 2 to 3 times compared to a conventional diesel vehicle. And initially and in part that's subsidized by some grants in some cases, and some government incentives, which definitely helps. But then when you look at the operational side of the equation, the cost per mile from an operation perspective, the energy usage, or the maintenance costs, that's where the benefit comes. And on the maintenance side in general, 30% type of a reduction in maintenance and operation costs compared to a traditional diesel vehicle. So now what does this essentially mean overall is, again, comes down to the use case and the miles. So if you're driving a lot of miles, you'll have a chance to sort of recoup that initial investment cost earlier and come to an overall cost of ownership sort of an advantage. Again, depends on the use case really. And we have now laid out our plans for what we call as generation 2 of series production vehicles, so mass production, series production vehicles starting next year. This is the equations that I was referring to apply to the Gen 2 vehicles. But there are plans, the technology is evolving so rapidly that we are already looking at Gen 3 or the next generation evolution of technology, where significant advancement in battery costs as well as fuel cost improvements in both of those, fuel cell costs, excuse me, will bring that initial acquisition price much lower as well. So certainly the second half of the decade is where I will say that we would see significant advancements leading to a total cost of ownership parity or advantage for several applications without the dependency on incentives.
And
Eric,
if I may, sorry,
go ahead.
please.
I was just going to say, Eric, I think listening to Rakesh, I think when you look back at our CNG kind of progress, we look at at BEVs as kind of taking the same path, right? We have the ability, nobody, at least we don't replace our fleet every year, right? So if you think about an 8 to 10 year cycle, depending on the type of truck and usage and all those other kind of things, you know, similar to how we pivoted from traditional diesel to CNG, to Rakesh's point, as some of this technology starts to advance and we'll start to have some clarity on what the cost curve is going to look like, right? Because you're not going to wait till the day it's cost neutral, because there's strategic considerations. We're going to have the benefit of being able to pivot at some point into these different types of technologies, because again, we don't replace our fleet overnight. And the other piece, and Rakesh hit on it, the infrastructure piece, at least for a company like ours, and I would think for the Penske folks, well, when we have 500 collection locations across the US and Canada, how do I get the infrastructure? Where do I put the infrastructure? Not dissimilar to the thought process around CNG, different considerations with electric vehicles. But for us, the technology working, being reliable, cost effective is one thing. The infrastructure piece will be a big question for us as well. Sorry, Patrick, I didn't mean to step on you there.
No, I think that's exactly right, John. And as you mentioned, infrastructure, if I may, I fully second Rakesh's point in terms of the expectation, also from a time perspective. As we said in an earlier section, I think really for battery electric vehicles and also for hydrogen, but probably initially perhaps a bit more for battery electric vehicles, the second half of the decade, I'm sure, and I base that, if you excuse that, me on the European market that I'm more familiar with than the US market for a second. But I am, so from a technology perspective, I'm convinced that if I look at Europe, for example, in the second half of the decade, we will see a significant ramp up of electric and potentially also hydrogen trucks. We will be building the infrastructure for that, for the avoidance of doubt. So that is absolutely what we want to and will do. We will do it together in the coalitions and with the partners, customers, shippers, freight operators, and OEMs that we mentioned before, but we will absolutely do it. I think, and John's example, I think on the RNG side actually shows it. I think electrification for a use case where you have a back to base or even point to point operation, I think even in that kind of use case, we might even see battery in particular already earlier than the mid-20s, because essentially the technology is ready, and I think this is a space that is extremely exciting at this point in time to get into. So we might see even in those specific areas, or in the RNG example that John mentioned already earlier, movement.
So, John, I go back to the question you asked me about, sort of similarities with the CNG experience and battery electric. One of the things that I think about a lot is the level of investment in the early stage with CNG compared to what we're seeing in zero emission is like totally different universe, right? CNG had a couple of upfitters that kind of started monkeying around with tanks, and a few early players in the utility market and private companies doing the infrastructure, and that kind of evolved. And there was some definite investment at the OEM level, but putting tanks on trucks and doing the bodies and all. But that level of investment was probably, I don't know, low hundreds of millions, right, for R&D and technology development. And as I'm sure Rakesh can attest, hundreds of millions doesn't go very far in the zero emission truck development space. And Shell is spending hundreds of millions, and all their competitors and all of Rakesh's competitors and fleets are making investment. Drew and his team have made huge investments over the last year. We're in the billions very, very quickly. And so I think that will be interesting to see how that may accelerate that market compared to the time scale that we saw with CNG. So I don't have any answers, but that's just sort of a comment to that question earlier. I want to get to Drew, though. We heard from Patrick, they're going to build the infrastructure. Rakesh is going to build the trucks. One of the other really critical components, Drew, that you guys know better than anybody, is at the end of the day, that truck needs to be serviced and maintained, right? And you guys obviously have a world-class operation in doing that for several 100,000 trucks. You've started to deploy and work on battery electric. So it's, what are your thoughts, on that maintenance piece, and how do you look at the technicians and training and preparing that workforce for this deployment and ultimately success, right? If that part doesn't work, the trucks don't work very well, right? So what's Penske been doing in that maintenance area?
So yeah, there's been a lot of things that we've done, and I think it's when you look at all the different types of alternative fuels that are out there, they sort of all have a little bit different requirements. And so our approach really is, the first thing we really look at is safety, right? What do we need to do to our buildings to safely maintain those vehicles? What sort of personal protective equipment do we have to have for our technicians, if any, right, to be able to, turn wrenches on those vehicles? Even down to what are the lockout, tagout requirements for a particular vehicle to be able to, make sure that the technicians are, working on them properly. Another piece of it is kind of the tooling side of it. And I'm not just talking about, any special, wrenches or, things like that, right? It really has to do with the diagnostic equipment, right? The software and, all those pieces that are necessary to really get the information and identify what's going on with that vehicle. And that sort of lays into how we manage it today with being able to get this information from the truck as it's going down the road and diagnose the issue and be able to, help that customer before, something bad really happens. So there's a lot of work that needs to be done there. And then on the technician side, it's the training, it's the preparation, right? We talked about the safety piece of it, right? You want to make sure that the technicians are comfortable operating and working around these vehicles. They have a safe working environment. That they understand the tools, right? I mean, there may be completely different software for a battery electric vehicle from a fuel cell vehicle to a propane vehicle, right? They have to understand all of those different applications and how they work. So we've made a lot of investments in our maintenance, our processes, our procedures, and it's really all about ensuring that uptime and reliability for all of the equipment that our customers are operating.
Thanks for that, Drew. It's interesting to think about the requirements there, right? And I think we probably would all agree, and maybe John as well here, given the number of trucks on the road and facilities. But these projects ultimately come down to sort of the weakest link, right? Can shut down an operation, and making sure that we have not only the vehicles from a good reputable supplier that are going to run well, and the infrastructure partner, and the fuel supply and all those sorts of things, but the maintenance is really critical to make sure that these vehicles can run every day. And it's probably maintenance on not only the vehicles, but also the infrastructure, right? The infrastructure isn't just put it out in the yard and forget it and come back, in 10 years. Drew, you guys have been working on battery electric truck projects. I think you got a half a dozen or more sites that are equipped with infrastructure and assumingly the techs to work on these vehicles. Tell us a little bit more about your thoughts around zero emission and sort of that time scale question again, right? Is what have you learned so far, and is there enough data coming in on BEVs to really make definitive decisions about the maintenance piece, and what does that do to inform the forward path here?
Well, I mean, kind of going back to the earlier discussion on, the timelines, right? I mean, I guess, your guess is as good as mine, right? I mean, as we talked about, there has to be this confluence of all these different entities, from the OEMs, from the infrastructure, from the fuel suppliers to, the maintenance providers, and, all these things really have to come together and meet at this point where you can get that cost parity, right? I mean, that's what's so important. In terms of the battery electric vehicles and the fleet that we're running, we have, well, with Rakesh and his team, we have 20 of the battery electric vehicles in the innovation fleet, and we've got over 300,000 miles on that fleet as of now. We've delivered over a half a megawatt of power to continue, in charging, to be able to keep those trucks down the road. And I can't tell you how much we've learned through doing this. From the infrastructure side, for example, one of the things that was kind of an interesting challenge was just getting that communication between the battery management system on the vehicle and the charging system to be repeatable and reliable, right? And once we got it together, right, and we had it working, next thing we knew, oh, there's a software update that we put on it, and even though it didn't have anything to do with the charging, or it didn't have anything to do with the communication, it stopped working, right? So we had to go back and figure all that stuff out. Then we would get, we would do a change on the charging system, right? We'd put in a new software to be able to, capture a critical piece of data. And next thing we know, nobody's able to charge anymore, right? So there's this, change management, right, that you almost have to think through as you're, getting these things to work. Now, I will say that, the team has done a fantastic job of figuring all this stuff out and getting it to that repeatable and reliable point. But I think that kind of illustrates, the beginnings that we're at, right, with battery electric vehicles and, all the other things that, that we talked about. John, you mentioned the infrastructure, right? I mean, we got to figure that piece out, right? I mean, and it's not just, Patrick and his team, building, these stations. It's, utility players that, we got to get the power, right? And it's a lot of power to be able to, keep these vehicles running. We'll figure all that stuff out. And, it just kind of goes back to what we said before, where it's so hard to put a timeline on it, right? The good news is that everybody's kind of working on it, right? There was a tremendous amount of effort in it, and there's a real want to make it work. So hopefully that means that we'll get there a little bit faster than we would have if we made some prediction about when it was going to happen.
And if I can just add, Eric, a couple of comments to what Drew said. So the reason, we are in this situation is because we are working with early prototypes, as everyone can appreciate. But very intentionally, the discussion and the decision was, let's involve our customers and our partners early on in the design and development process. In a traditional type of a program, whatever length you take, 4 to 5 years, right? The last year is when we would give customer demo units to our partners. We don't have the luxury with the ZEV vehicle products that we are working on dealing with. The magnitude of the challenge is very significant. We want to involve our partners early, and that is why collectively we are finding some of these issues as well. But it's been great from the perspective that Drew and his team have been an active voice in the design activity as well, right? Where the charge port should be located, how much energy we need to recuperate during a regen event. That input, that feedback from the drivers, that design input from the customers, that's the advantage we've had through this process, through the innovation fleet and the customer experience fleet that Drew was referring to.
And we're doing exactly the same. I mean, with Rakesh's colleagues, for instance, in Europe, right? We working out, what are the infrastructure requirements for on-the-road electric charging? What are some of the tech specifications that we would need? What type of charging would we need? 1 megawatt, etc. And then we can work this on our network side. Okay, so where do we have the retail sites? What do we need to have in place? As Drew was saying, you also then need the power for that. You need the right grid structure for that. All these good things. But the key point, I think, really is, which I want to underline, we have to do this together. I mean, none of the players can do it on their own. We have to do it together with customers, but also with OEMs and with the different sort of partners in the chain.
Fully agree to that.
Thanks, guys. I want to maybe follow up on the power. And it's obviously complicated, right? There's a lot of things that have to work right with a lot of partners. But one of the findings from this year's report and the survey, which I was shocked at, and I really pressed our team. I said, that can't be the case, was a very significant number of folks who are thinking about or are investing in battery electric are also looking at on-site energy, distributed energy generation and storage to supplement that. And as a Californian who a couple times a year gets, the text from the utility saying your power's going off tonight because the winds are blowing or there's a fire down the street as we had 2 days ago. These things happen, and that's a pretty common question. We actually had an audience question come in about, how do you deal with power reliability? And I'm sure, John, you guys have thought through this in detail, even on your CNG, right? As if the power goes out, you still have to run a compressor and get the trucks out in the morning, right? There's an expectation of service there. So, what's the group's thoughts here on how are we going to move down this path of zero emission vehicles and dealing with power reliability, which is critical to fueling vehicles and making rollout in the morning to go do the work that they need to do?
I would say, Eric, we've lived through some stuff here in Texas recently where the power went out for a few days. We had some brownouts and shortages and whatnot. Not a place where, not unlike where you live, it doesn't happen here very often. In fact, I've lived here 9 years, first time it's really happened at any scale. I do think we've, whether it's been storms, hurricanes, et cetera, we've had to endure, we've got contingency plans to run a CNG facility if we have to bring a gen system in to do that. That's different than the power source going out for the battery electric vehicles, right? If all I have to do is fire up one CNG infrastructure system at a site, that's different than, hey, the source of power went out, the grid's down. Then you have a whole nother set of circumstances to deal with, and trying to generate that kind of power on site through some of the examples you gave for a fleet as big and heavy duty as ours presents some real challenges. But again, I think one of you folks said earlier, if I think about where CNG started in the refuse industry and the transportation industry and the momentum it either did or didn't have at the time and how much money was being invested, and you think about the capital and intellect that's being applied towards zero emission vehicles now, the two I think are not comparable. There's so much more momentum, I think, now for a lot of reasons, right? I mean, we're talking about it differently now. The environmental voice is a much stronger one now than I would say it was 20 years ago, as evidenced by the monikers you have on the screen here, the present company excluded. I mean, there's a lot of folks who are really interested in this and putting capital against it. And I think the pressure, if you will, to make the pivot is stronger now than it was on CNG. So as much as there is a lot of unknowns on these infrastructure questions, battery technology, how do you dispose of batteries, what's the life, I mean, all those things, I do think there's a lot more money and horsepower being put up from an intellectual standpoint. And Patrick made the point a few times, collaboration is important. You got more money, bigger names, a lot of intellectual horsepower all converging on this, which means I think for all the unanswered questions, I think it is going to accelerate quickly.
Yeah, I would, I just think about, what happened over, the past 2 weeks in the Southeast, where there was a major petroleum artery that was, fed the entire Southeast or 50% of the Southeast with fuel that was basically shut down, and the disruption that was associated with that, right? So, we sort of think about, if you think about that in terms of, electricity and the grid and what could happen there, it just, amplifies the fact that there has to be some sort of a, disaster recovery plan at the utility level, at the customer level, right? The fleet level, right? Everybody's got to have one of those, no matter what your fuel source is, right? I mean, you just have to have one of those. And, how we end up figuring out how to deal with that, whether it's, batteries, solar, microgrids, combination, all of the above, it's something that has to be figured out. There's no doubt about it.
So speaking of disaster recovery plans, Drew, I want to take us back to March of 2020, when the world changed, right? One of the things that really has, in my mind, just been unbelievable is, through the pandemic and the economic fallout from that, if you live in the, advanced technology alternative fuel world like we do, it's like there wasn't a pandemic, right? I mean, the level of investment has multiplied, tenfold or something insane, right? And the commitment to this pathway has really remained very, very strong and increasing. So, I want to ask you all, what have you seen from your perspective over this last year with COVID and impacts on the business and budgets and ability to invest? What's been the pros, the cons? What have you seen?
I'm happy to take a crack at that first, Eric. I mean, listen, the first handful of months, I think everybody was, kind of sitting on their hands trying to figure out, what does this all mean? What's the landscape going to look like in a week, 2 weeks, a month, right? Now, clearly, we're in a much better place today. I think for us, we learned some lessons overall, not just with regard to the fleet, but how to run more efficiently, right? We learned how to do things because we had to in a hurry, and it got us, in a lot of ways, some of the paradigms that I'm sure all of us suffer from. Those things got broken, and it forced us to think differently. And we found some efficiencies in the business. I think with regard to the only thing that really changed for us was not our strategy. It was really about pausing until we had some more clarity, because if the visibility there got really, really narrow for a while. And once things started to open up, we, in terms of our spend and how we manage the business from a capital standpoint, our strategy didn't change. It was just pausing to make sure that we had some clarity around what was coming in front of us. And to your point, in the space that you operate in, it didn't seem to miss a beat. Everybody kind of just continued to plow through, which is, evidence that everybody sees that long term as that strategy is not going to change. So that's my 2 cents on the subject.
Yeah, I'd agree with you 100%, John, right? I mean, it was, I think everybody probably pressed the pause button on certain aspects of, things that they were working on, and quickly shifted to the safety of their associates and their customers, right? So that became, the primary objective, at least for us, and I'm sure it was for, all the organizations, here as well. And, I don't think we really saw any slowdown in the momentum associated with, various initiatives. I mean, we still, our customers are still running the nearly 700 alternative fuel vehicles, that we have in the fleet. We were still maintaining those. We were still, executing on our, energy efficiency programs. We were still consulting with customers. We were still running the innovation fleet, right? I mean, so those things didn't stop because, the transportation industry didn't stop. I mean, it, shifted a little bit, right? And sort of, what transpired with, shutdowns and those types of things, but it never stopped. So, everybody here on this, this panel has been, is involved in that. And so I know they didn't stop either.
Yeah, I'm just going to add that, fully agree with Drew and John. And yeah, I would say new lessons and, what the human race is capable of, both from adaptability and resilience perspective. And yeah, the transportation industry didn't stop, as Drew noted. Kudos to the entire industry. Kudos to the truck drivers who kept, the world moving, as we say, day in, day out, and, kept us all going despite the pandemic. And I can say, I can wax lyrical about my team and the entire Daimler Trucks North America team, which I'm sure my co-panelists can do about theirs as well. But it was amazing how the team rallied over a few short weeks to come up with a strategy to deal with the situation we were all faced with. And yes, we did have disruptions during the second quarter while we were trying to figure out how to deal with it. There were supply chain disruptions as well. But I would say within a few short weeks, in the large scheme of things, of course, the team was able to figure out how to keep the essential projects on track. Yes, some projects did suffer from a few months perspective, timeline perspective, but yeah, trying our best to keep things on track. And the topic we are talking about today, sustainability, that is again so critical and crucial for our collective futures, that the activities did continue by and large for most organizations, and certainly for us they did.
Yeah, I think Rakesh, you make a really, really important point. I think that the transport industry, I mean, from the driver to everyone basically involved in logistics, in road transport, but also in the other modes of transport. I think really for me personally, it's been one of the hero industries out of this crisis, because it just has kept things going. I mean, there were moments that also I personally remember there was pretty much the only thing that was still going was road transport, were people stocking the supermarket shelves basically, enabled by logistics and transport. So I think that is a moment that many people, certainly not myself, will ever forget, and that's tremendous, and I think that's a lot of folks have been involved in, again, from the driver to many others. So that's one. I think the other point I wanted to make to your original question, Eric, when I remember back in, I don't know, April, May last year, when the pandemic, the crisis was still kind of fresh, I remember there were many, at least internally, we had discussions, say, okay, where is this decarbonization journey going? Where is this momentum now going that was building up on everything that we've discussed in this call? And there were some voices, I think also in the wider public debate, that were saying, maybe the pandemic leads to a sort of revisiting all of these priorities, and we're in a totally different space, and maybe people will not be talking about zero emissions and decarbonization, because priorities will just move on. They will turn out to be a flavor of the month. And I think that, with the benefit of an additional year, I think has become extremely clear that that is not the case. If anything, the momentum over the last year has even increased on this. And CO2 prices, etc., in my mind, have only one way: they will go up, and that is driven by obviously the threat of global warming that is looming, and society's reactions to that. So I think that's one of the key insights. It's not going to go away. The change is going to happen, and everyone on this call has an opportunity to take part in it and shape in it, which is great. And John shows the example of how it can be done.
Yeah, absolutely. Well, it's been an interesting year, and I'm sure the lessons learned from the pandemic in terms of how quickly we can react and shift and adapt to new business conditions have been learned, and many times over, which probably has in a weird way a great benefit, right? If we can survive this, we pretty much survive anything, hopefully. I know we're just pretty much out of time here, but I do want to ask one kind of wrap-up question. We kind of took a look back at the prior year, want to ask for the thoughts of the group on the year ahead, and kind of what gets you most excited, and I want to maybe focus that a little bit more. We've talked a little bit about partnerships, and many of you are partnering on different things, and you're all great partners of ours on this report. Rakesh and Drew, you guys have partnered on the innovation fleet. I know Shell and Daimler are working on partnerships, and Daimler and Volvo, their competitor, are working on partnerships. I mean, there's just partnerships all over. John, I'm sure you guys have partnerships galore to get to where you guys have been. So as we think about the year ahead, and what the landscape looks like today and where we're headed, what gets you guys most excited with these different fuels and technologies, and specifically some of the partnerships that you have to make all this work?
I mean, I'll start, Eric. I mean, in a lot of ways, we work with all these organizations as the customer, and I forget who said it, Drew or Patrick. I'm not sure. Rakesh said, I think the conversation from the customer and the OEMs. I mean, I think that part of the equation's gotten a lot healthier. At least from my perspective. Somebody said nobody's gonna solve this in a vacuum. Taking WM out of it is sort of the customer on the screen. The folks who produce vehicles or those who produce fuel, you got to be talking to your customer. I think the collaboration between, whether it's these four organizations, your organization, a lot of people are probably on the screen listening. I think that is as healthy as it's ever been. And I think that's the way you add speed to this equation. And how do you get there faster? It's by having all the interested parties around the table. I think that, coupled with the intellectual horsepower I mentioned and the capital dollars that are being allocated to this, I think that's what gets me pretty excited. If you would have talked to me 10 years ago about electric vehicles, we're still trying to figure out the CNG thing. I don't have the same reservation, I would say, thinking about electric or zero emission vehicles that frankly I had around CNG, because that pivot from the traditional diesel heavy duty truck to CNG was kind of murky. We're there now, and what we learned is, forget the technology for a second. I know that we're going to be able to pivot as long as we can solve for reliability, environmental impact, economic, sustainability, all those things. I feel like we as an organization at least have learned how to be able to pivot our group, and more specifically what we do in our operations, to be able to accept the new technology.
Yeah, John nailed it. I think our partnerships, right? Eric, your question also was leading us in that direction, and I fully agree. That's the exciting thing for me, the opportunity for the entire industry, all the stakeholders, to come together for a common united cause, and we all do our parts and make this successful, so that one day I would certainly like to look my grandchildren in the eye and say, hey, I tried, I did my part, and this is how we contributed to safeguard our collective futures.
Yeah, I mean, there's a lot of things that we get excited about, right? In this space, and I just think it's another solution, right, that we can provide to customers, right? It's a new solution that is still developing, right, and there's still work being done around it. But the amount of organizations and interest and push that's happening here, I think, is really what makes it exciting, right? Is because I mentioned before, that confluence of all those things that need to come together. It kind of feels like they're sort of all getting around and working together, right, through the partnerships that we just talked about, and it feels like that consensus is starting to grow and things are starting to move in that direction, and that's exciting.
Patrick, your perspective, and maybe I'll ask you for a little flavor of the European perspective, and what we might be thinking about there as well.
Yeah, I think the fundamental question is probably quite similar in Europe as it is in the US. In the way, I mean, what Rakesh was saying, I think in the next 10 years, the world in many sectors, and the transport business is clearly one of them, will change, and some would say will change dramatically. Probably, I think it's tremendously exciting and personally actually motivating to be part of that, because I think together we can build something that actually makes this entire industry and this entire business fit for the future, and it makes it truly, it's a bit of an overused word, but it makes it sustainable. It makes it something that we can actually leave to our children and grandchildren. So I think that's tremendously exciting. I think we see, activity in Europe that is maybe a little bit more directed at specific technologies compared with the US, but also in the US, of course, things might be changing. The basic technology set, I believe, is the same, and therefore, I think we just got to stay very, very close with what it is that our customers really need. Work with them, has been said many times. Work with the partners, and then we'll figure it out. And it might even be different market by market, and that's totally okay as far as I'm concerned, as long as we, as long as we hit the target. So circumstances can be different from market to market. That's okay. We will deal with it. What matters is, how can we help our customers make that transition and make it work for them.
Yeah, Patrick, I agree that the next 10 years is going to be a wild ride, right? And I often talk to our team about what an amazing opportunity that we get to work on the front lines of this revolution, really, right? Where we're taking the global transportation system and shifting it to zero emissions. And as we all know, that can't come soon enough, right? And whether the goal is a 2030, 2040, or 2050, or whatever commitments that are being made to get carbon down and out, it's going to take a monumental effort to get there, because that 3 decades is really a short period of time. But as we've talked about, the investment that's being made, the acceleration we're already seeing, I appreciate these last comments around the power and need of the partnerships to help really get that speed and acceleration as well. We're going to need every bit of it. So really great discussion here. Thank you all, John, Drew, Patrick, Cash, been great. I wish we had a lot more time, as I'm sure our audience does, who have asked a lot of great questions, and apologies we haven't been able to get to them all. We've tried to weave them in throughout. Thank you all for your participation. We're really excited to launch the 2021 State of Sustainable Fleets report. We will continue to do so year over year, and really just try to track and see what the trends are, and try to keep ultimately that end use customer informed of where things are and what's available to them to jump in and make this journey as well. So again, big thanks to all of our speakers here. Thanks to the audience. Thanks to the media that's tuned in. We truly appreciate the interest, and we look forward to seeing you all soon. Have a good afternoon. Be well, be safe. Thanks, everyone.
All right, everybody, take care.